What if I told you that billionaire hedge fund manager Ken Griffin is making massive bets on just 3 AI stocks right now? Ken Griffin did not build a fortune approaching $49 billion by overlooking major shifts in technology. It is no surprise that a Citadel Advisors hedge fund is heavily invested in companies tied to artificial intelligence, making AI one of the core themes in his portfolio. When someone like Griffin moves billions, you pay attention. He's not chasing hype. Today, we'll break down his top 3 AI picks: a cloud and enterprise software leader, a social connectivity pioneer, and a consumer tech giant quietly embedding AI into your daily life. This is about following the smart money and understanding where the real wealth is flowing in the AI revolution. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. So grab your coffee, let's dive in. First up, Microsoft, ticker MSFT. Ken Griffin's biggest position is Microsoft. By the end of the third quarter, Citadel Advisors held more than $2 billion worth of Microsoft stock, a substantial increase from where the fund stood at the start of the quarter. Griffin doubled down hard, boosting the stake by 100.3% during Q3. Microsoft dominates the AI infrastructure game with Azure, its cloud platform powering everything from startups to Fortune 500s. Once a company builds its AI on Azure, switching is nearly impossible, creating a sticky, recurring revenue stream. The real game changer? Microsoft's partnership with OpenAI. By integrating ChatGPT technology into products like Office 365, they've put an AI copilot in the hands of millions. Microsoft Copilot is now woven into Windows, Word, Excel, PowerPoint, and Teams, transforming productivity and creating a new premium subscription revenue stream. Griffin sees the clear path to monetization and the massive market for these tools. Microsoft's enterprise relationships give it a huge edge. They can upsell AI tools to existing customers, shortening sales cycles and deepening trust. Financially, Microsoft is a fortress: strong balance sheet, consistent growth, and huge free cash flow. This lets them invest in R&D, make strategic acquisitions, and reward shareholders, all at once. Under CEO Satya Nadella, Microsoft has reinvented itself repeatedly, from desktop to cloud to AI. Their ambition is massive: gaming with Xbox, hardware with Surface, and AI everywhere. Microsoft controls the cloud, delivers killer AI apps, and has the financial firepower to keep pushing forward. When Griffin doubles down, he's not just buying a stock, he's buying the backbone of the next era of computing. Microsoft's data advantage is huge. Bing, LinkedIn, GitHub, all feeding their AI models and creating a self-reinforcing feedback loop. Better products attract more users generate more data, and more data makes the products even better. Yes, the valuation is high, but Griffin is paying for quality and long-term growth, not a quick trade. He's positioning for the next decade, making Microsoft a cornerstone of his strategy. To sum up, cloud dominance, killer AI apps, deep enterprise integration, a fortress balance sheet, and visionary leadership. Microsoft is building an AI fortress, and Griffin is betting big on its future. This is the kind of structural advantage that's nearly impossible to beat. Azure powers the AI, Copilot brings it to users, and their sales team delivers it worldwide. It's a flywheel that's just gaining speed. Griffin knows the market may be underestimating Microsoft's dominance in this new era. While others chase speculative AI plays, he's investing in the companies selling both the picks and the gold. Microsoft's access to vast data, from search, social, and code, fuels smarter AI, reinforcing their lead. This creates a virtuous cycle. More users, more data, better products. The premium valuation reflects execution and growth runway. Griffin is willing to pay because the long-term story outweighs short-term concerns. He's not after a quick buck. He's building for the next decade. Microsoft is firing on all cylinders, leading one of the most important tech shifts of our time. Cloud, Copilot, enterprise, financial strength, and leadership. It's a nearly unbeatable combo. That's why Ken Griffin is so bullish. Microsoft's AI ecosystem is only getting stronger. The company's scale and integration make it the foundation of the AI revolution. Griffin's bet is clear. The road to AI runs through Microsoft. Microsoft has a market capitalization of about $3.6 trillion. It delivered earnings per share of 14.07 and trades at a price-to-earnings ratio of roughly 34.51. In 2024, Microsoft generated $245.12 billion in revenue and posted net income of $88.13 billion, underscoring its massive scale, steady profitability, and the cash flow that continues to fuel investments across cloud, productivity, and AI. For investors, it's about seeing beyond daily price moves and focusing on deep, structural advantages. Microsoft's AI fortress is growing stronger every day. They're turning scale into an unbeatable edge. This isn't about one product, it's about a synergistic ecosystem. Azure, Copilot, enterprise sales, it's a powerful flywheel. Griffin sees the momentum and is all in. Microsoft is the backbone of the AI era. That's why it's Griffin's top pick. If you want exposure to the AI revolution, Microsoft is the place to start. Let's move to the next AI titan. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Next up, Meta Platforms, ticker META. Meta Platforms sits as Citadel's third largest holding after an eye-popping move. The fund ramped up its exposure to Meta by an astonishing 12,693% in Q3, leaving Meta as one of the top weights in the portfolio. Meta's business is built on AI, from your Facebook feed to Instagram Reels to the ad engine that powers its profits. Their AI keeps users engaged longer, making Instagram a fierce rival to TikTok. More engagement means more targeted ads and more revenue. Meta's scale is unmatched, over 3 billion daily active users, generating a mountain of data to fuel their AI. This data advantage is Meta's deepest moat. No competitor can match it. Griffin knows that in the AI age, data is the new oil, and Meta has one of the world's largest reserves. Meta's open-source llama models are a game-changer. By releasing powerful AI models for free, they're building a global developer community and putting pressure on rivals like Google and OpenAI. It's a disruptive strategy. Commoditize the AI model layer, while Meta profits from its core ad business. Developers flock to Llama because it's powerful, accessible, and free. Meta's rebuilt ad system uses AI to deliver better results for advertisers, even after Apple's privacy changes. Tools like Advantage Plus automate ad creation and targeting, making Meta's platform more valuable to businesses. The result? More ad spend, more growth, and a resilient revenue stream. The metaverse vision is still alive and it's powered by AI. Griffin is betting that Meta's deep AI investments will eventually make the metaverse a reality. If they succeed, Meta won't just play in a new market, they'll create it. The upside is huge, even if it's long-term. Meta's financials have improved dramatically, cost cuts, streamlined operations, and a new dividend signal maturity and discipline. Griffin sees management focused on real value, not just moonshots. Meta combines a near monopoly on digital social graphs, world-class AI research, a dominant ad business, and a massive bet on the next computing platform. The stock is still reasonably valued compared to peers, given its growth and profitability. Griffin is buying now because the market hasn't fully priced in Meta's AI-driven turnaround and open-source strategy. The core ad business is a cash machine. Llama models create a powerful ecosystem. The metaverse is a long-term growth vector. All this in one company. When Griffin increases his stake, he's signaling that the risk-reward is heavily skewed to the upside. Meta has proven its resilience, navigating mobile, privacy scandals, and now leading in AI. Adaptability and innovation keep them at the top. Meta Platforms commands a market cap near $1.59 trillion and reported earnings per share of 22.59. Its P/E ratio is about 28.05. Meta pulled in $164.5 billion in revenue in 2024 and recorded net income of $62.36 billion. Those figures paint a picture of a company that is still highly profitable while reinvesting heavily in AI and augmented reality to drive the next phase of growth. For Meta, it's about an AI supercharged core business, open source strategy, financial discipline, and massive long-term optionality. Griffin is betting on Meta's next phase of AI-driven growth. Meta's AI advantage is only growing. Their data and user base are unmatched. Open-source llama models are reshaping the industry. The ad engine is stronger than ever. The metaverse is a bold, long-term play. Financial discipline is back. Griffin sees the fundamentals, not just the headlines. Meta is positioned for explosive growth. If you want exposure to AI in social and advertising, Meta is the play. Let's move to the final AI giant. Meta's transformation is just beginning. Griffin's bet is clear. Meta is an AI powerhouse. The next wave of growth is coming. Now let's talk about the AI giant hiding in plain sight. Finally, Apple, ticker AAPL. Apple comes in just behind Meta as Citadel's fourth largest position. Griffin and his team added another 2.56 million shares of the iPhone maker in the quarter, lifting Citadel's Apple position by 108.2%. While critics said Apple lagged in AI, they missed the point. Apple's approach is quiet, methodical, and deeply integrated. Griffin isn't betting on flashy demos. He's betting on Apple's mastery of the consumer experience. Apple's AI is everywhere. Photos curates memories, the keyboard predicts words, Face ID unlocks your phone in a flash, all powered by on-device AI. On-device processing is Apple's secret weapon. It keeps data private and makes AI features fast and efficient. Users trust Apple with their data, and this strategy reinforces that trust. Apple designs its own chips with powerful neural engines, optimizing AI for speed and battery life. This tight hardware-software integration creates a performance moat competitors can't match. Now, Apple is taking the next leap with Apple Intelligence, generative AI built into the entire operating system. It'll help you write, summarize, create, and organize, contextually and personally. The brilliance? Distribution. With a single update, hundreds of millions of iPhones become AI devices overnight. This could trigger a massive hardware upgrade cycle. Griffin is betting on it. Apple will monetize AI not with subscriptions, but by selling new, more powerful devices. Their partnership with OpenAI brings ChatGPT to Apple devices, but only as an option, keeping privacy first while offering the best of both worlds. Apple becomes the gatekeeper, controlling the user interface and customer relationship, while AI models become commodities. The ecosystem effect is huge. Once you use Apple Intelligence on your iPhone, you'll want it on your Mac, iPad, and watch, deepening customer lock-in. Apple remains a behemoth with a market value of about $4.11 trillion. Its earnings per share were 7.45, and it trades at a P/E of approximately 37.26. Apple reported revenue of $391 billion for 2024, and net income of $93.73 billion, reflecting enduring consumer demand, strong services growth, and remarkable margin conversion despite the scale. Financially, Apple is a fortress, a top global brand, loyal customers, and a booming services division. Services like the App Store, Music, and iCloud provide high-margin, recurring revenue. Griffin isn't just buying a phone company, he's buying an ecosystem, a brand, with immense loyalty, and the largest consumer AI rollout in history. Apple's patient product-focused approach is set to win mainstream consumers. Most people want tech that just works, Apple's specialty. The potential for future AI-powered products is massive. Think Apple Car or AR glasses. Today's Apple Intelligence lays the foundation for tomorrow's innovations. While others worry about short-term sales or regulation, Griffin sees the big picture, an AI-driven upgrade cycle and a privacy-first strategy. Apple doesn't need to be first, it needs to be best. Their entry into generative AI will redefine the user experience for hundreds of millions. This isn't a speculative bet, it's a proven playbook. Apple has redefined markets before. MP3 players, smartphones, tablets, smartwatches, they enter, perfect, and dominate through integration and user experience. Griffin is betting they'll do it again with AI. Apple's AI integration is just beginning. The upgrade cycle could be massive. The ecosystem is stronger than ever. Privacy and performance are unmatched. Griffin's conviction is clear. Apple is about to put AI in everyone's pocket. The next wave of growth is coming. If you want exposure to consumer AI, Apple is the play. Apple's strategy is built for the long term. Griffin's bet, Apple will lead the next era of consumer technology. The AI revolution is here, and Apple is ready. Let's wrap up with your next move. Apple's transformation is underway. The future is AI, and Apple is at the center. There you have it, Microsoft, Meta, and Apple, the three AI titans Ken Griffin is betting on. These aren't speculative plays, they're giants with deep moats, financial strength, and clear AI strategies. Following the smart money is a proven strategy, and Griffin's moves offer a roadmap for the AI revolution. Taken together, these three giants show different emphases, but a common theme. Microsoft blends scale and cloud-led recurring revenue with aggressive AI investment. Meta combines massive profitability and reinvestment into next-generation platforms. Apple leverages a huge installed base and services monetization to sustain margins and cash flow. For investors thinking about tech exposure, these numbers offer a clear snapshot of where each company sits as they position themselves for the next wave of technological change. If you want to level up your investing, check out my Value Stocks Investing Master Course, link in the description. For exclusive stock tips and analysis, join the StocksGalore Patreon community. Now, your turn. Which AI giant, Microsoft, Meta, or Apple, has the most explosive growth potential? Drop your pick in the comments. Don't forget to share, and subscribe for more investing insights. Thanks for watching, and I'll see you in the next one. Optional. For more resources, check the links below. End screen prompt, subscribe and watch next.